Hello, my name is Crystal Dahl, and I'm the Online Communications Manager here at Meritas. I just wanted to take a moment to welcome and thank each of you for joining us on today's webinar. For those of you that are new to Meritas, Meritas is an established global alliance of closely connected yet independent law firms that each offer a full range of high-quality specialized legal services. We were built upon a rigorous system for monitoring and enhancing the quality of our member firms and have been connecting clients with carefully qualified business legal expertise in over 250 markets around the world since 1990. Meritas capability webinars are regularly presented by Meritas members. Before we get started, I just wanted to go over a couple of housekeeping items. Meritas offers the ability to listen to our webinars through your computer speakers, but if any time you have any difficulty hearing the presentation, you may also call into the associated telephone line instead. All phone lines will be muted. If you experience any technical difficulties, please press *0 to connect with a support technician, or you can use the questions pane on your control panel. Since you will be muted, if you have a question for the presenter, you may use that questions module in your control pane. You might need to expand the section by clicking on the gray bar that says questions to actually open that section up. Lastly, in the next few days, I will distribute a copy of the presentation, a recording of the webinar, as well as everybody's contact details so that you may reach out to them directly if necessary. With that, Alex, are you ready to get us started?
I am, thank you. And welcome everyone. For some of you, it might still be earlier than others, but here on the East Coast, it's around 2 o'clock. So I will get us started, and we have some great panelists. So I will be asking the questions, but I will let the experts speak for most of it. And I think now would be a good time to introduce them. So let me advance this. Okay, so we have 4 panelists today, and we're going to cover 2 broad topics. One has to do with insurance, which if you have followed the news is particularly relevant nowadays. Dispensaries, among others, have been looted. So I'm very grateful that we have Holly DiLorenzo here from Heimberg Insurance. On the banking side, we have Frank Smith and Peter Sue from Republic Bank of Arizona and BNB Bank, respectively, and Angela Lucas from Integrating Compliance Solution, which is the kind of consultant you need if you really are trying to implement a cannabis banking program. And I'll let them introduce each other themselves in turn. So Holly, I turn that over to you.
Thank you. I'm Holly DiLorenzo with Hardenberg Insurance Group. I am the director of the Cannabis Division. We developed this division about 3 years ago to answer the needs of the cannabis companies, because cannabis insurance is very different than regular insurance. So we've been working in the industry, like I said, like 3 years, and yeah, just trying to help as many cannabis companies as we can through this process. Thanks for having me.
Great. Frank, why don't you tell us a little bit about what you do?
Sure. Of course, my name is Frank Smith. I'm currently with Republic Bank of Arizona. I have been banking marijuana-related businesses from Tier 1 licenses to CBD hemp-based businesses for close to 5 years for Community Bank. And I've been through several brutal exams over the past 4 or 5 years, but I believe I have a pretty good understanding of what it takes to maintain compliance, what the regulatory expectations are, and more than happy to discuss that with the group.
Great. Peter?
Oh, sorry, I thought you were going to go Angela next, sorry. Peter Sue with BNB Bank. And yeah, we're a $5 billion bank based in New York. We have a full service seed to sale, whether it's cannabis, hemp, CBD. We're comfortable banking in the space. Oddly enough, the bigger bulk of our book is in the more of the ancillary, the indirects, as Angela likes to say. but we're certainly comfortable with the plant touching side of the business as well. I should mention my bank also. We also have a robust practice in other high risk industries. We do money servicing businesses, we do gaming, and as a result of that, we feel like we're well positioned in the cannabis space because our regulators know us and we know what we're doing when it comes to high risk. So it's not as if we're kind of dipping our toes in and there's going to be issues down the road where the regulators come in and they say, wait, you guys, you guys don't know what you're doing here. So I think for us, getting into the cannabis space was a very natural progression. High risk is something that we know how to do and how to control. But yeah, I'm happy to be a part of the panel. Thank you very much.
Great. And Angela, why don't you bring us in?
Sure, no problem. So my name is Angela Lucas. I am the Chief Risk Officer over at Integrated Compliance Solutions, and I oversee our cannabis banking vertical. Prior to coming over to this role, I really cut my teeth as a regulatory bank examiner. I was a federal examiner for a number of years, dating back 20 years ago, and then went into consulting back in 2008, and that's where I have been ever since. I've been looking after cannabis banking issues since the Cole memo and the FinCEN guidelines have been issued. And really, from our perspective, we provide a holistic foundation for any banks and credit unions that want to get into this space, from establishing their program from the ground up, meeting with their boards, meeting with their regulators, and then automating the entire process and really putting into place a robust solution to ensure that everything is accurate, scalable, and obviously compliant. So that is where I come from and what I oversee.
And Angela, just to sort of expand on that, so you just focus on the bank side of the business. You guys don't do consulting for companies who want to get banking services?
We do on a very limited basis. Our primary client base is the financial institutions and those that support the financial institutions, but we do some consulting with the businesses themselves to give them an idea of what you need to have in place in order to approach a financial institution to get the banking, what they should be looking for. What we've really been focusing on a lot is teaching these businesses that not every bank or credit union is created equal. And we've seen a lot of entries and exits by financial institutions because they didn't have the right foundation in place. So we really teach the businesses, here's what you need to look for in a banking partner, and we try to match them up accordingly. So we do that. And then we also have we have a couple subsidiaries under our company, and we also have a payments arm. And so we are just in the process of developing, and this is more on the business side, a mobile wallet that is closed loop ACH based that allows for a dispensary to white label the app so that their customers can engage more frequently and more meaningfully with them. And so through rewards and campaigns and things like that, but we're also on the payment side of the business as well.
That's great to know, because I think, as I've told some more panelists, we have a very diverse group on the line. This includes both lawyers and in-house, and as well as private practice. And I think it's good to know sort of what backgrounds we're all coming from, because I think that will be very helpful for the discussion. Let's kick off, and I'll do the boring stuff first, and then we can get to the good stuff. I'm just going to try to advance the slide. And for some reason, I'm having a technical difficulty doing that. There we go. So I always start these by not assuming that everyone is on the same page. Some of this is very basic stuff that most of you have dealt with a million times. There's some people call it cannabis, some people call it marijuana. It's really the same thing. Cannabis is the more recent term, the more clinical term, and it also helps distinguish marijuana from hemp, since they're both types of cannabis. But high THC marijuana and low THC hemp are obviously different, because the latter has been legalized under the Farm Bill, whereas the former remains very much a Schedule I controlled substance, which makes the banking and insurance situation interesting, as we're going to discuss. And obviously the other big one hanging out there is CBD, which is now being extracted, at least we're told, from mostly hemp. Although, if you watch the lawsuits about high concentrations of THC, maybe that's not the case, or not the kind of hemp that is authorized by the Farm Bill. But that is another big sector that is, in a lot of instances, not as banked as well as it should be. And it will create probably more insurance issues once the product liability and false advertising and other claims sort of really come into their own, which we've seen some green shoots out of. So for the litigators in the group, that is a big one that's sort of brewing. If you follow, the ALMs and the Law 360s, those are the kinds of lawsuits you see tied to CBD, which is very much a stalking horse for, I think, how cannabis is going to be treated once we get federal legalization. And advance the slide. So again, is it marijuana or is it hemp? That's the $54,000 questions a lot of times. When you get these slides, there's hyperlinks in there for some of the background. And an important point to make about hemp is, while it's legal federally, not all states distinguish between the two. So if you're in a state that still treats both marijuana and hemp the same way, while the federal Farm Bill has created some protections for transporting hemp through those states if it's grown in accordance with plans that are finally slowly being adopted. Those are extra issues you have to deal with, but just realize that just because it's legal on the 2018 Farm Bill does not automatically make it legal in the state to use. There's a small minority of them, but if you follow the Big Sky Pharmaceutical saga, you sort of know where they are. So that's sort of something to still watch out for. We'll cover very briefly, the law applicable to cannabis. This is very U.S. centric in a lot of discussions, and that's fair because the U.S. was the driving force behind this. But just realize that cannabis is scheduled under both the Controlled Substances Act and the Single Convention on Narcotic Drugs, which the CSA was actually implementing some of. So they're both scheduled substances, which creates issues with import and export if you get to that portion. But it also makes you realize that our friends to the north, this is something they struggled with, the Single Convention. And I believe their decision was, the human rights of actually using cannabis outweighed any obligations they might have under the Single Convention. But just realize that it's regulated both on the federal level and also internationally, and it's in flux, probably more so on the international level now. Although, who knows if this year anything will happen. But as long as it remains federally illegal, it is still very much illegal on the state level, which is again why we're having this webinar to discuss how regulators and states and banks and insurance companies are dealing with this. And sort of my second bullet point there is, while we call it medical cannabis, as far as the federal government is concerned, it has no currently acceptable medical use, which puts it on Schedule I with the hard drugs, as opposed to Schedule II with harmless things like cocaine, which have acceptable medical uses. And this sort of is the main thing that is going to guide our discussion. This is as Angela mentioned, the Cole memo and the FinCEN guidance. The Cole memorandum was a series of non-binding, but nevertheless very much guiding principles for individual attorney general, deputy attorney generals in various federal circuits about how to use their quote unquote limited resources. And they identified things that they really care about when prosecuting marijuana crimes in states that have adopted some form of legalization. And the big ones really are keeping it out of the hands of children, making sure that the proceeds don't go to criminal enterprises, diverting it to other states. That's the big one, no line crossing that everyone is sort of keen on. And making it as a, using it as a cover for trafficking of other illegal drugs or other illegal activity. The other ones obviously are just as important, but the first 4 bullet points are really where the rubber meets the road for a lot of banking discussions. It served as the basis for the FinCEN guidance. FinCEN is the arm of the Treasury Department, and it was incorporating the Cole Memorandum. The Cole Memorandum itself was actually rescinded by AG Sessions while he was in power, because he was both an opponent of cannabis and a proponent of discretion for federal prosecutors. As a bit of an inside baseball, if you were actually to go back into the manual for those AGs, you will actually realize that a lot of these things were already in there about how to use their resources. So while the Cole memo itself has been rescinded, some of the rationale that underlies how they use their resources was already part of how they were doing their jobs. So they were not starting from scratch and didn't go back to a blank slate. Obviously, if you're dealing with medical marijuana, then you have the additional layer of the protections that are afforded by the congressional budget rider. It's, I think, still referred to as the Rohrabacher Amendment, even though it is now on its 3rd set of sponsors. But basically, that says that the federal government should not be using federal funds to prosecute things, prosecute the medical marijuana industry. And as you'll see in the last one, while everyone sort of assumes that they've taken a step back, continue to watch the Weed Maps subpoena case that actually came out of California. Weed Maps got itself on the map by refusing to yield when they were told to take off illegal dispensaries from their service, which allows you to basically, find, I guess, the best prices and delivery for your needs. While they ultimately relented, that was not before the federal government issued very wide-ranging subpoenas. There's still very much of a question about what it is that they're looking for, but they are looking. So do not assume that it's a totally hands-off approach. And with that, I am going to just advance through these hemp slides, and I'm going to get us to CBD, which is another big one. CBD, there was a big campaign saying hemp was legal, and the implication was that CBD is legal. If you look at any sort of advertising, they say CBD is 100% legal. That is not 100% correct. The FDA has asserted its authority under the Food, Drug, and Cosmetics Act. That is a rulemaking that is ongoing. The lines keep shifting, but more or less, it seems they're still focused on going after people who promised that CBD will treat everything from the common cold to now COVID-19 with cancer and other things interspersed in there. That is a big no-no. They are also very much against putting it into food and medicine, because they still consider it to be an active ingredient, because it was one of the ingredients in Epidiolex, which is a both CBD and THC medication for epilepsy that they approved. They are still in the rulemaking process. Obviously, with everything that's been going on, the focus hasn't been on that for the FDA, but it is very much the focus for people in the industry. So it is still in flux, and it's still not 100% the same as having to deal with any other agricultural or product. You know, what does it mean that it's federally illegal? Well, there, you know, you can be potentially liable under a bunch of criminal statutes. You have to interact with many agencies that are federal, and I list them here. Intellectual property and bankruptcy are federal rights that are unavailable for pure cannabis. For CBD and for hemp, that has been relaxed somewhat, especially in the trademark field. The big one that you might have seen recently is the PPP program, the Paycheck Protection Program. The SBA considers marijuana businesses and both direct and indirect, at least one step removed indirect, to be ineligible for funding, which has been a problem for a lot of people, especially since on the one hand, dispensaries are deemed essential, but on the other hand, they're not eligible for PPP funds. And I turn this over to Holly, who's going to take us through insurance.
Thank you. Okay, so what lines of insurance are necessary for a cannabis company to have in place? I went over some of the main ones, and I'll dive into products, liabilities, and directors and officers, because there's a lot of controversy around those too. So due to federal law, state legal companies operate in a gray area, making it difficult to access capital. Using banking services, obtain adequate insurance coverage, and access other services that make traditional businesses competitive. Most insurance carriers will exclude claims that fall within federal jurisdiction, so it's important for any cannabis business to seek out coverage that is catered to the industry by people who understand it and support it. The cannabis insurance industry serves a specific purpose for the marijuana industry because of the design of the policies. Cannabis insurance does not include the same exclusion as traditional insurance policies. Traditional policies often have exclusions for contraband or illegal substances. For the foreseeable future, the entire U.S. cannabis industry revolves around an illegal substance. Marijuana or cannabis is listed as a Schedule I drug right next to heroin. Marijuana has been legalized on the state level and is gaining support federally, but that does not change the need for specified cannabis insurance to protect the business. A recent survey by Manta and Insuron reveals that just how many entrepreneurs are putting themselves at risk. Fewer than 3 in 10 small business owners in the survey have business owners policies, the basic business insurance that covers general liability and commercial property insurance to protect them from a loss. Even fewer, 21%, have errors and omissions or professional liability insurance. 17% have workers' compensation insurance, 6% have business interruption insurance, and only 2% have cyber insurance. No matter what type of business it is, business owners operate under some degree of risk. Sadly, no business is completely immune to lawsuits. Fortunately, however, a variety of insurance options exist to help protect these businesses. Starting with general liability. General liability insurance is coverage that can protect from a variety of claims, including bodily injury, property damage, personal injury, and other situations that may arise, including slander, libel, copyright infringement, and more. The 3 main categories of coverage include premises liability. This coverage is to suffice a lease requirement for slip, trip, and fall hazards. Medical payments supplements medical payments for slip, trip, and falls and can prevent occurrence claims. Hired and non-owned auto. Incident liability coverage provided to vehicles being used in the cannabis business. General liability insurance is not always required, and it is tempting for cannabis business owners to forgo the expense. Unfortunately, a single accident could result in a lawsuit that quickly uses up the resources and often results in compromising the business or worse. General liability doesn't only pay for the damages, it may also provide costly legal defense. When the general liability coverage is obtained, it is the investment in protection that will keep businesses running during the natural ups and downs of business. Moving on to property. Property policies designed to insure structures such as buildings and greenhouses, as well as other properties owned by a cannabis business operations. The correct property insurance will ensure that cannabis operations are back up and running as fast as possible when disaster strikes. Property insurance can provide coverage against damage caused by fire, theft, and vandalism, and loss of income due to any of these items. Under property, we also have equipment breakdown. Cannabis businesses have very valuable cultivation, processing, manufacturing equipment, along with very high security systems. Standard property policies do not provide adequate coverage for that equipment. Coverage in the event of a loss can be found with equipment breakdown insurance for the cannabis operations. Equipment breakdown covers losses resulting from breakdown of certain types of equipment, including security and alarm systems, fire detection systems, heating and air conditioning equipment, telephones, copiers, printers, computer-controlled equipment, and other electrical and mechanical equipment. For example, the computer system is damaged by a power surge or the processing equipment unexpectedly breaks down. This coverage helps pay for the cost of repair or to replace the equipment itself, as well as the income loss from the business interruption. We have crop insurance for both indoor and outdoor operations. Indoor crop insurance is very easily available. Outdoor crop insurance is a little more challenging. A crop insurance policy covers cultivators if there is a loss to the crop on certain conditions such as fire, lightning, wind, hail, theft, and sprinkler leakage, among others. Loss caused by changes in climate or mold, disease, and fertilization issues, however, are generally not covered by crop insurance policies. Although it is not currently required by any state, crop insurance is recommended to every legal cannabis grower. Cannabis crops are extremely valuable and take roughly 4 months to harvest. As a cultivator or a grower, their income is reliant on the cannabis crop. Cannabis is agriculture, just like corn, wheat, or soy. Cultivators have to protect their income, therefore they must have cannabis insurance, specifically crop insurance. Every year out west in California and Arizona, there are wildfires that destroy thousands of acres of lands and crops. Even when flames don't ignite the crop, the smoke and the ash can result in plants testing positive for asbestos, lead, arsenic, and magnesium. While we don't know where and when these disasters are going to strike, history tells us there is a good chance they are going to happen. Cannabis cultivators must be prepared for this unfortunate reality. Contrary to what many think, marijuana insurance is available. Lately, there have been many rumors as to what happened when Lloyd's of London pulled out of Colorado's expanding marijuana market. Why did they do this? In general, Lloyd's of London is a carrier of last resort, not a carrier of first or only resort. Many agents were selling products that we believe were not written with the right policy forms to accommodate the industry, claims that may have been denied. Lloyd's was and is still concerned about the marijuana being Scheduled 1 drug. Clearly, this makes banking a difficult situation. Contrary to what many think, Lloyd's did not pull out of this marijuana market in Colorado due to claims or fears of claims, rather that the fact that they shared over 80% of the risk. Also offered to cannabis companies is commercial auto. Commercial auto in the space is very similar to commercial auto, and it covers the same way as a commercial auto policy for other industries. There really are no other nuances that would make it different. So it covers things like liability insurance covers bodily injury to others and property damage to another vehicle if you're at fault in an accident. Personal injury, collision coverage, comprehensive coverage. They can all be found in a cannabis policy specific, cannabis specific auto policy, just like their counterpart in other industries. They do offer cargo insurance for cannabis operation. Cargo coverage refers to the protection of items transported by the business or for the business. A cargo policy can cover in the event the cannabis product is lost, damaged, or stolen, while being loaded, transported, and unloaded. With a cargo policy, coverage can be selected for cannabis products transported by the insured or as an extra coverage for items transported by a hired company in the case their insurance fails to cover the loss. Some of the benefits
Holly,
of having...
Sure. If I can ask a question about that. When you say that this coverage is offered, have there been many claims, and have there been any sort of special issues with actually collecting on them? So let's take cargo. Somebody loses their cannabis shipment. It's stolen.
I have 3 or 4 different dispensaries that offer delivery, and we have this cargo insurance on their within their insurance policies. They have not have any claims, so I don't have any firsthand knowledge with my current clients of any claims that that the product was stolen or damaged or anything like that. However, I'm trying to think. I cannot think of an instance that I just don't know of any claims examples for this cargo insurance that it would be that they would have trouble. So all these insurance policies are written specific to cannabis. So that's why the cannabis insurance industry is so different than the the regular insurances. We're specialized. So if there were a claim for this, just because it was cannabis, I don't see why that would be.
Is there a requirement in there that you report it, you file a police report as you would with sort of another sort of loss before you claim?
Absolutely.
And,
absolutely.
Yes. So and since they're operating in states that are legal, that
right.
shouldn't be a...
That shouldn't be a problem. Exactly.
But
now,
something
if they're,
to consider.
Now, if they're obviously, if they're delivering across state lines, then that's going to be a big problem. So, but yes, if they're working within the confines of the state and they're following all the rules, then these losses will be covered. So that brings me to products liability. Products liability exposures for cannabis businesses are vast and include edibles, vaporizers, pesticides, molds and fungus, breach of warranty, misrepresentation, label claims, failure to warn, and deceptive practices. The main concern with cannabis products, and thus a major area of exposure for businesses, is impairment. This is oftentimes found as an exclusion in many dispensaries' insurance quotes. In addition, a manufacturer, distributor, or retailer is also considered liable for defects in the manufacture or design of the final product that causes injury when it is being reasonably used. While products liability can be based on defect or negligence, it is more commonly based on strict liability that says a seller, distributor, or manufacturer of a defective product is liable to a person injured by that product, regardless of whether the defendant did everything possible to make sure that defect never happened. Strict liability has been invoked for manufacturing, design, and warning defects. Anyone in the distribution chain can be liable, whether it is cultivator, processor, or dispensary. Pesticides and additives in products can cause recalls. The direct application of banned substances, residual contamination, or processors contaminating trim during extraction can lead to a pesticide recall, while CBD produced outside the regulated market and terpenes not created in FDA or state licensed facilities can cause an additive recall. For example, Denver-based ALCC LLCC, doing business as the Dab by Next Harvest, is voluntarily recalling retail marijuana products due to the presence of elevated yeast and mold counts and potentially unsafe pesticide residues. In addition, Emblem Cannabis Corp., a Canadian licensed medical producer in Ontario, also began a voluntary recall of 4 lots of dried marijuana when the CBD content I've identified on the label was higher than the concentration actually present in the products. Product liability coverage can help in cases like these to protect against the claims brought by consumers affected by the recalled products. Contracts are becoming increasingly prevalent within the cannabis supply chain. Contracts typically further define responsibility between parties, which has insurance implications. Product liability insurance, offered either as part of a commercial general liability policy or a standalone monoline policy, is designed to protect the company from first-party and third-party claims of bodily injury, property damage, and other damages related to products and services that the company sells. All right. For cannabis company, Gap.
Yeah, we had a question about D&O, which I see on your slide. Why is it so expensive?
Okay, you want me to just jump to that?
Yes.
Sure. All right. Directors and officers provides broad balance sheet protection for the organization in addition to asset protection for directors and officers who may be held personally liable for their actions. Cannabis businesses run a higher risk of facing a D&O claim or a lawsuit aimed directly at directors and officers of the company rather than the company itself. In some cases, fighting a D&O claim is so expensive it can bankrupt both the company and its owners. D&O claims in all industries have been steadily increasing for the last two decades, and unsurprisingly, more and more of these claims are now popping up in cannabis. It is essential for any business taking risks or working in the industry to plan ahead and protect themselves from this sort of expense and damaging litigation. Traditional business financing is not available in the cannabis industry, which forces businesses to seek out capital from outside investors, private equity sources, and/or venture capital. If an investor feels they were misguided, deceived, or wrong, they may decide to file suit directly against the company's directors and officers. Anytime a business takes on a new investor, increase the pool of people who could file a D&O claim against them. Lawsuits can be filed by a variety of stakeholders, which is why potential claims can arise from various scenarios. Some common D&O risk scenarios include shareholder actions and derivative claims, reporting errors, misrepresentation, failure to comply with regulation or laws, and insolvencies, creditor claims, and competitor claims. Even more perilous for directors and officers who must also navigate constantly evolving regulations and limited banking resources. Companies and large and small, public and private, for-profit and nonprofit, all face D&O litigation risks. In 2016, a survey by Chubb, the average reported loss for a directors and officers judgment was $387,000. No matter how successful the cannabis-related business is, the reality is that a substantial financial loss of $387,000 could destroy a company instantly, or at least set it back to a point that it might be difficult to recover from. All of these factors contribute to a vulnerable industry with the steadily increasing D&O class action lawsuits. I have a couple of cases listed here. So, Canadian LP Canatrust CEO Peter I'm going to butcher his name, Aceto, violated regulations by growing cannabis in unlicensed room. His actions led to an 85% decline in the stock's price, a class action lawsuit, and a personal loss of $8 million in the form of stock options. American cannabis company MedMen's executives are facing a $20 million lawsuit over accusations that include a lack of transparency as well as the directors and officers enriching themselves at the expense of shareholders. So there are some of the reasons why D&O is so hard. Well, when cannabis first hit the market on the West Coast, D&O was readily available to all of the companies. Right now, we have four insurance carriers. They're all found in the excess and surplus lines that are willing to offer directors and officers coverage. Lloyd's of London's also pulled out of this market as well, and it is just because they can't get these companies can't get traditional financing, so they're bringing more people into the mix, and then that opens up the risk to more lawsuits. So that's why it's hard to come by. It's expensive, but it is available to these companies.
I appreciate it. That's fascinating, and that can be a separate CLE all of its own. So I appreciate that. So let's move to banking. And so I guess the first big question is, what are banks looking for? So maybe Frank, you can tell us, what are you as a bank looking for?
Sure. and this is going to be dependent upon really, every bank's going to have its own approach, right? So what I say here may not be, Peter's approach or other banks' approach, but I think for the most part, these things will ring true. First and foremost, transparency with the organization and the application process. Bankers are going to want to see your financial records, your point of sale system information and reporting in order to evaluate your risk or the business's overall risk. Another thing that, sort of an issue is asking for permission and not forgiveness. A lot of times I'll have clients that may think they can run a transaction or do something that, may cause a little bit of heartburn for your banker. It's always best to open up that communication with your banker, let them know what your purpose is for a specific transaction that may cause concern. State oversight is also important. Every state has managed this a little bit differently. I am in Arizona, and I can tell you the state of Arizona has not done a very good job with providing bankers, regulators, with information of the marijuana program. Other states like Nevada, which has a metric centralized reporting system, has done a little bit better. And being able to look at third-party data sets is one of the best pieces of compliance a banker can ask for. And if those come from the state's database, that's even better. Business acumen, of course, early on, we saw a lot of what we called enthusiasts in the marketplace within the industry, especially in Arizona. We had a lottery system where people just needed a $5,000 in a business plan to get a license. And so there was some additional risk in the marketplace in Arizona early on, and I think some other states are probably experiencing that as well, such as California and Oklahoma. Robust reporting and compliance capabilities. When I look at a marijuana-related business, I want to make sure that they can provide me the information and data sets I need to maintain compliance and to prove that compliance program to our auditors and our examiners as well.
So let me ask Peter. How does that square with what your bank does?
Thank you. Yeah, I totally agree. When I think about a cannabis business, and I think about what we're asking them to provide us, whether on the outset or as a continual basis, the truth is it's no different than any account that's walking in the door, right? Like as far as KYC, meaning know your customer, anti-money laundering. So Frank mentioned transparency, and yes, transparency for sure. But again, the reality is that's true of any account that's walking in. I would say that here it's just kind of that process on steroids, right? Are we asking to identify them? Yes. Are we, doing criminal checks, things like that? So if I look at, FinCEN guidelines and the Cole memorandum on which those guidelines are driven, those kind of principles still carry over, right? Like, of course we don't want to do business with criminals. Of course we want to make sure that our clients are, on the right side of the law. But again, here in cannabis, it's just truly magnified and amplified because not only are we, not only do we not want to do business with criminals, we're going to take steps to ensure that they're not criminals. We're doing the deep dives, deep background checks, which Angela does for me, by the way. So, again, from my perspective, is it really different than anybody walking in the door? Not really. We're just asking for a lot more, right? Like instead of one ID, we're asking for two. Percentage of ownership, we're drilling down, further, things like that.
So Angela, let me ask you, because this was a big surprise to me when I was doing my initial research and when we met. How many banks are actually doing this kind of banking, your best estimation?
That's a great question. So the FinCEN data sets that they put out every quarter would suggest that there's anywhere from 600 to over 700 banks and credit unions that are in this space. And we would say that it is exponentially much smaller than that. The reason for that is because the data is driven by marijuana-related SAR filings, and if anybody on the line is not familiar with that, a financial institution is required to file a marijuana limited SAR whenever, a suspicious activity report, whenever they're doing business with a marijuana related business, a direct plant touching business. They're also required to file a marijuana priority SAR whenever that business is suspected of violating one of the Cole Memo priorities or violating state law. A termination SAR is also required to be filed whenever a financial institution exits a relationship or that customer exits the bank for any reason. And so what we see is a lot of these SARs being filed on ancillary businesses, those that are just indirectly deriving their income from a marijuana related business. They're filing on hemp, they're filing on CBD. Their regulators don't have a really good understanding of when and how to file these SARs. And so we see these numbers pumped up. There's also reason to believe that there's multiple keywords in the SAR filing. So we would estimate, less than 100 institutions nationwide are actually actively banking direct plant touching entities. Now, there's a lot more that do the hemp and the CBD side of things, but direct marijuana related plant touching businesses is less than 100.
And going back to the C word compliance, which is the last one on this slide, what sort of compliance are you, I guess, either from the banking side or from if one of your other verticals, what sort of compliance is involved for these sort of businesses? So if you're banking a tier one or a direct touching plant versus a non-touching business.
Right. So it's become a regulatory expectation that every federally regulated financial institution has a cannabis banking program in place. And what that means is looking at it from a risk assessment standpoint, looking at it from a policy standpoint, and really defining the acceptable cannabis business relationships that they're willing to take on. So are they willing to offer deposit relationships as well as loans to direct marijuana related businesses, the ancillary businesses, the employees of those businesses, and then the hemp and the CBD side of things. There's also, to Frank and Peter's points, there's a lot involved in terms of the due diligence and the enhanced due diligence that goes into the front end of really understanding your customer and understanding your customers' customers. From the business standpoint, go ahead. From the business standpoint, there is a lot of information that needs to be presented to the financial institution, but it's very easy to put all that information together. And in most cases, it's exactly what is provided to the states in terms of filing their applications, knowing who the owners are, who the beneficial owners are, the business plan, financials, all of that information, including the source of funds. And so it really should never be a surprise to the business or to the bank what is required in order to get over that first hurdle and make sure that both sides have what they need in terms of the banking relationship, because we want the financial institutions to really get a comfort level with these businesses. In most cases, they are the best and most transparent customers. But we also want the businesses to be comfortable that these are not fly-by-night institutions that are entering and exiting the space, that they really have a good, sustainable solution.
Great, I appreciate it. So maybe let's talk about stuff you guys don't want to see. Let's just go back. So Frank, why don't you tell me, what do you guys not like to see when a customer walks into the door?
Well, of course, there's the obvious potential FinCEN red flag violations, right? Diversion of product is, of course, the #1 hot topic issue, I think, within the industry. And as part of the, the original Cole Memo guidance as well. Unexpected transactions is probably one of the things. When we do transaction reviews, we establish a baseline of activity for the client, whether that's based upon account activity as well as the sale of products. We see things that vary from that expected activity. Those are the things that we're going to have to highlight, identify, and resolve. Client's response to that is critical. So if there's a wire transaction or a large check payment to someone we weren't expecting or did not know, being able for the client to respond to that appropriately and timely is pretty critical. And that sort of dovetails into, supporting documentation, the transparency with the relationship, making sure that we understand everything that they understand and can properly report that and convey that to our regulators and our auditors. The forgiveness and permission thing, again, I've had clients who will push through a transaction and be like, oh, well, I didn't know that was going to be a problem. Those are the types of things that, could potentially put an account in jeopardy. And then, of course, we want to see the data sets from your point of sale, from your inventory systems, to match up with actual account activities and retail and wholesale production data sets. And then, of course, the last thing we'd ever want to see is, the client's name or the business name show up in a negative news search.
What kind of bad news are you talking about?
Well, anything that would sort of implicate the risk profile or change the risk profile for the relationship. Of course, any criminal activity would be the first one that would get them shut down. But potential lawsuits, litigation, other sort of reputational issues could be a problem as well.
Peter, how about from your point of view, from your bank's point of view, anything different or anything you would sort of add on to this?
Yeah, so let me echo some of the things that Frank said, right? Negative articles, God forbid it's a criminal background or something like that. And actually that has actually come up before, where when we ran a background check, there was an article about someone that, and it was almost unfortunate. It was almost like an overreaction perhaps, but, this day and age of sort of, again, truly magnifying and amplifying that, in an abundance of caution, we decided not to take out an account when there was a negative article that was, years old. And, honestly, on a personal level, I felt like it was a little too much. Having said that, it makes sense, from a compliance perspective. The one thing I would add to that is, again, we see a lot more of the ancillaries, right? The hedge funds, the private equity guys, or even, consultants in the space, right? And I think, and Alex, maybe you can speak to this. I think that in the early days of the cannabis industry, good legal representation, good accounting representation was probably not as readily available as it is today. And so I get the impression that there are certain people that, if they started their company, let's say 3-4 years ago, they kind of did it on the fly, and so sometimes the structure is confusing or just bad. And that's probably due to a lack of good advice, competent legal or accounting representation, right? So again, going back to the transparency issue, that's where I do think we see things as we're going through an application. There are things that don't make sense, and that's a big problem, right? And it could be that it doesn't make sense because of what I said, because they got bad advice, or the structure of the company is no good, or it could be that they're trying to cover something up, right? So that's the concern. That's the issue that we grapple with. Is it just, is what you're telling me true, that, hey, this is just the way we set it up? Or is it you're trying to obfuscate some sort of data here, like why is the ownership all over the board, So yeah, I mean, I would say that's the one thing that I see a lot of that maybe is slightly different than what Frank sees.
Angela, and we got an audience question that I think is probably best directed to you, since you have a more global view of what banks do. When they do these background checks on as part of their diligence, are there places that they always should check, and are there services they should use, or is that sort of bank by bank situation?
So I would say there's a lot of very common sources to go through. Every financial institution is using the sanctions list, the OFAC list, things like that. But LexisNexis, Dun & Bradstreet, there's a lot of other negative news outlets out there that you can basically integrate directly with your core to do an ongoing news scrub. There's also subscriptions out there that you can get to do an ongoing scrub of your database and things like that. So there's a lot of really good resources out there that can be used to do that. And it's not overly burdensome to do it. The one thing that the banks want to make sure of is that they're getting that authorization up front to make sure that they have the customer's authorization to do those background checks. So that's one thing that I would say. And just to kind of add one additional flavor as to what bankers don't want to see that wasn't brought up is if we see ever that there is a point of banking terminal or a cashless ATM being used at the dispensary level, those are 2 red flags to us, because there is no, regardless of what rumors fly out there, there's no current legal way for Visa, MasterCard, debit cards, or credit cards to be used at a dispensary. There's a lot of behind the scenes gyrations going on that pull into light a lot of the money laundering laws out there. And so that's one thing that we see right up front. If we see that a dispensary has point of banking, cashless ATM, we definitely have to dig further to see what kind of gyrations are going on behind the scenes.
Yeah, I was going to say that's always a big one, where you're trying to hide what it is you're doing. That is a big no-no for this area of law, for many areas of law, but this one in particular. I did want to ask a question, sort of this monitoring, that obviously sounds like something banks don't necessarily do for other industries they're involved in. So the question is, what are the monitoring fees for the various direct versus indirect? And you don't have to quote your banks, but sort of a range. And have they been sort of, as with insurance, going down in price, going up, or sort of staying steady? And I guess I'll open that up to Frank, Peter, and Angela, any of you.
I'll go ahead and start. I think I've heard a lot of feedback from the industry in Arizona about the excessive fees being charged to the industry. When I came on board at Republic Bank, one of the things we wanted to do was sort of change that notion that banks can charge these clients whatever they want because they have very little to no other resource available to them. So we have, priced it basically at cost. Of course, there is a cost of compliance for the bank. I do have analysts that we have to pay to monitor these relationships on a consistent basis, so it is not something that is cheap for us to manage. And so we're trying to price it, where you would see sort of money service business fees or fees for like pawnbrokers or casinos or so forth, other high-risk industries, and not have sort of this, extremely high rate of service charge income or fees for these clients. I think that's been our approach here.
Okay, I think Peter, you had a question that you wanted to ask.
Oh, well, I'm sorry. I was going to address your question as well. Yeah, again, not to keep the same thing, but I kind of agree with Frank. I mean, we don't. When we came in, it was the same thing, right? We heard there were these outrageous prices and fees that banks were charging. And in fact, back then there were all these, quote unquote consultants in the space that were apparently also adding their fee on top. So yeah, we did try to get away from that. We didn't necessarily want to work with the, again, any number of these consultants that are in the space that are kind of, adding their fee on top of whatever our fees are. But again, to Frank's point, it does cost us more to bank an MRB, whether that's direct or indirect. And so, we do pass on those costs. I would like to think that we're not absorbently priced. We are. We're making a profit, but it's not as if we're making a killing on it,
Right. And there was another question about the cashless ATMs. And Angela, this was directed to you. How about for payments? Have you seen any deployed in municipalities or elsewhere to accept payments of taxes, or are those separate? Those are just machines that accept the cash and transmit it to the municipality?
So no, what happens with the cashless ATM is if I go in and I try to use my debit or my credit card, I put it into the machine, and rather than getting cash out, it gives me a receipt that I then take to the bud tender. So if I said I wanted to take out $60, I get a receipt that tells me I took out $60. I now have $60 to spend at that dispensary. When it shows up on my bank statement, rather than showing up as a transaction at a dispensary, it shows up as a withdrawal from my account, an ATM withdrawal. And so not only are you being charged fees at the ATM, we've also seen these coded as cash advance fees on credit cards. So you're also hitting your cash advance fee on your credit card at that point too. So that's where it's masking and concealing the transactions. As far as paying utilities, taxes, things like that, we actually have seen a lot of these dispensaries take duffel bags of cash down to the IRS, and they will, or their local tax authority, and they will count it, they will accept it, and in a lot of cases they'll actually charge a penalty for accepting cash. But if the dispensary doesn't have banking, there's no other way to pay their taxes, and so they have to pay it. They end up paying a penalty. So there's a lot of cost that goes along with banking and all cash business, which is why we love the Franks and Peters of the world that will give them bank accounts.
And a question to the Peters and Franks of the world, and this was another one we received. Do you treat cannabis banking and hemp banking, and I'll throw CBD banking in there, differently? And does it fall inside or outside of your cannabis banking program? So Frank, you first.
Go ahead. So I have rolled in our CBD hemp-based accounts into our marijuana-related business program for one primary reason, is that some of these organizations have a high propensity to turn into a marijuana-related business, where they may take their product and sell it to a Tier 1 license entity. That is probably one of my bigger concerns when it comes to managing those relationships. We do have a program and an application process in place for CBD hemp-based businesses. The compliance and oversight is not as rigorous as it is for a Tier 1 license, or even some of the lower tiered related businesses. And I try to consider them not a marijuana related business, but to weigh the merits for each application on its own basis, and ensure that we have identified any risk with the relationship and have priced it accordingly. So in essence, yes, it is part of the program. It sits on the sidelines, the way we've sort of managed it, and we sort of incorporated into our program on the sidelines in that sense.
How about B&B, Peter?
Yeah, same for us. So coming in, so the onboarding process, certainly we do identify them as, whether they're CBD, hemp, cannabis. And yes, if it's CBD or cannabis or hemp, they'll be routed through a different path, my path. Once that delineation has happened, they do get vetted more heavily. But once the account is open, however, then they're kind of treated accordingly, right? So for example, an online CBD reseller, certainly we don't view in the same lens as a person that's growing hemp, for example. So yeah, I do think the devil's in the detail. It really depends very specifically on what they're doing, what part of the sales cycle they're in. But I'm sorry, to answer your question, it sounds like we are identifying them up front, and we are vetting them in a different way. But the cost is different, though.
And Angela, from sort of a global view, which I'll keep coming back to you, do you find that to be sort of the norm for the banks, or are there variations by geography?
No, we strongly encourage that. So as I mentioned before, we like to see the cannabis banking program. 2 years ago, it was a marijuana banking program because we didn't have the legality of hemp. We didn't have the proliferation of CBD. And so now we're looking at have a holistic, robust cannabis banking program that covers the full spectrum of marijuana, it covers hemp, and then it covers CBD along with any other cannabinoid derived product or cannabis derived product that is rolled out, because we're going to see more. It's not just going to be CBD anymore. We're going to see other derivatives that enter the market.
Okay. So we hit our 1 hour mark, but I have a bunch more questions. I will obviously not hold anyone against their will, but if people want to hang on for another 15 minutes, I think we'll ask a couple more questions, if that's okay with the panelists.
I'm good with that.
Yeah, I'm fine.
Okay. So another one that I thought was interesting was, we heard a lot about the Safe Banking Act, which was at a certain point seemed like it was going to pass. Then COVID-19 hit, and I haven't heard about it since, aside from being a rider to some bills that didn't advance. Angela, I'll ask you first, and then I'll get Peter's and Frank's perspective. How, if it is passed, on a practical basis, how is that going to change banking? And do you expect a lot more banks to come in? And also, is that going to change any of the burdens for the people being banked?
Right. So there's not going to be an influx of hundreds of financial institutions overnight entering the space. That's not going to happen for multiple reasons, but one of the biggest reasons is that a lot of these financial institutions are not willing to invest into the infrastructure, whether it be people, resources, technology, time, all of those things, training, in order to effectively administer their program. Because even if or when the Safe Banking Act passes, those compliance responsibilities are not going to go away. We still need and should want to have enhanced due diligence in place, because if you look at markets like up in Canada where they legalize, there's a big black market in Canada. We have a big black market here, even in legal states. And so we don't want those black market funds going into the financial institutions. So we're still going to need to have that infrastructure in place. So we may see a few come into the market, but we're not going to see a giant influx in terms of, just because it's safe for them to do so. And let me just add something to that, because I just kind of thought of this very quickly, is, to Peter's point earlier, whenever he mentioned about doing higher risk and more complex transactions, the regulators don't view this as high risk simply because it's marijuana. That's one of the biggest reasons out there. But if it was legal, or if the Safe Banking Act passes, they're going to look at this like any other concentration of higher risk or higher complex or more complex transactions. And so they're going to want to see, a bank will not get in trouble simply for banking cannabis, but they will get in trouble if they don't have the right infrastructure in place. And so regardless of whether there's safe harbor for institutions to bank it, they still need to make sure that they have the right foundation, the right monitoring, and the right due diligence in place. And I think that's really important for everybody to understand.
That's great. Frank, if the Safe Banking Act passes, is that going to change anything for your bank about how you do business?
No, I would agree with Angela. I mean, most of the banks out there aren't doing this because of the risk associated with it, not because of the federal prohibition. I'm sure there's a combination thereof, but for the same reason, certain banks don't bank MSBs or pawn shops or casinos. They don't know how to manage the risk appropriately. And so I don't think there's going to be a big influx, like Angela said, of banks entering the market. There will probably be some that may have been sitting on the sidelines waiting for this to happen. Personally, I really hope that the Safe Banking Act would create some movement for Visa and MasterCard and their prohibition, because I think the biggest issue facing the industry is the fact that it's cash-intensive business. It opens up additional risk for potential money laundering. And if we can get some of that cash out of the system, get into traditional payment methods, I think you see some of that risk greatly reduced as a result. I'm not sure if the Safe Banking Act will get Visa and MasterCard to budge, but that would be my one hope for the result of that legislation.
And Peter, how about BNB? I know you guys entered the banking, was it about 2-3 years ago into this vertical?
Let me see. We started researching the topic beginning of last year, so I guess we've been in about a year or so.
Which is about the same time that, let's say, banking started gaining sort of.
Yeah.
traction.
Well, so I don't. It's hard for me to opine on obviously what other banks might do, but since Angela and Frank both took the negative here, if I could just play devil's advocate here, I actually do think it may, at least initially, have almost the opposite effect. And I say this because we're seeing this happen in the hemp space, right? The hemp and CBD space. As the perception on hemp CBD becomes like it's illegal, it's fine, everything's fine with it, the profitability or as a banker, your ability to sort of charge more, right, to handle it as a risky asset, slowly decreases, right? So, there's this kind of a race to the bottom, if you will. There are banks out there now that are just like, oh, CBD is no problem. We're going to put it right in the regular program, right? And the issue is that, and I think Angela and Frank could probably speak to this as well. The issue is that there is more regulatory expectations on us. So how do we meet those expectations if we're then unable to pass on costs, right? Because there's this race to the bottom. So if Safe Banking Act passes and there is an influx of banks coming in, there could be a driver where that ability for us to now enforce more draconian measures and charge accordingly can slowly disappear. And if anything, you might see some of the banks that are in now get out because it'll make more sense for them to just go after regular C&I business than to take on the risk of developing a new cannabis program or to continue to bank cannabis if suddenly the companies are unwilling to comply or frankly pay.
That's fascinating. I appreciate that. I think one last question, and sort of dovetails into what you said. So yes, people start viewing CBD as low risk, but is it, from your banking perspective, lower risk, especially regulatory one? And let's take it backwards to Peter and then Frank, and then we'll get Angela. Yeah.
Okay.
I think on an ongoing sort of monitoring perspective, as you know, we don't have to file SARs and things like that, but there is expectations up front of us vetting them more heavily, right? So no, I can't say that it's a. I mean, if I had to separate the three, obviously it is less risky than, let's say, direct cannabis. But no, from our perspective, we are still viewing it as something we have to, heavily vet and continue to monitor. So again, that problem for us does exist, where we would like to be able to charge X, but the reality is the market wouldn't sustain it, and we actually had to curtail our fee structure, and we were kind of at a point where we thought, well, maybe we shouldn't bother, So yeah, do I think it's less risky? I think in terms of how the regulators might view it, things like that, it's less risky, but it's still just as much work.
Yeah, I would sort of agree with those statements. We have an application process, of course, for CBD hemp-based companies, and as Peter sort of alluded to, they come in different shapes, sizes, business models. A finished goods retailer online is going to be a much different risk profile than, somebody farming 50, 100 acres of hemp. By way of example, there was a press release early in this year in the state of Arizona stating that like 40% of the hemp crop, the first round of hemp crops produced in Arizona, tested hot. And so those will add additional risk profiles to them. So it is less risky, but it is absent of risk, and it really is based upon the business type and the business model. And we are trying to price it less risky than our tier 1 relationships, but we do have a cost associated with that.
So Angela, you're going to tie this up for us. How does that sort of square with how it has helped, going nationwide?
Well, so the way that I look at hemp and CBD is that I feel that the direct licensees, so the plant touching entities that are licensed at the state level, are easier to bank than the hemp and CBD customers at this point. And it goes back to something that Frank mentioned early on about the consistency in their reporting and the robustness of their reporting, because the licensees are required to report their information. They have different reporting structures in each state, that's true, but there's not a reporting requirement on the CBD side. There is very little licensing on the CBD side, and there's a lot of inconsistencies between the states. In one state, vaping is illegal, in one state, CBD tea is illegal. In some states, the oil is illegal. So in some states, they don't allow it at all. And then on the hemp side of things, there is a licensing requirement now, but they also don't have the reporting structure. And so when you're trying to get behind whether the transactions are normal and consistent and expected for your customer and really understanding what's going on with their business, there's a very high chance of commingling of THC funds in with those hemp and CBD funds. And you have no way of knowing that now, because unless you're pulling invoices and really looking at vendors and pulling in the information, it makes it a lot less transparent at the hemp and the CBD side of things. So I would actually, it would be nice if banks were able to charge more for CBD and hemp, but because of the perception that they're less risky, there's not an appetite in the market to charge those higher fees.
Fascinating. Well, I really appreciate all of your time. We have now gone almost 20 minutes past, and we held on to most of our attendees. So that indicates people have more questions. So if you have more questions, please don't hesitate to email us. You have all of our contact information on here. There's our emails on the slides, which Crystal will send out. There will be some additional materials if you need them for CLE. One of the questions was whether we provide CLE. Crystal, you will correct me if I'm wrong. Meritas does not provide the CLE, but it will provide the materials, and it is up to the individual attorney to self-certify with their state. But we certainly have covered enough law to satisfy that, I think.
Correct. Yes. Thank you, Alex.
Okay.
And thank you everybody for joining us. Holly, Frank, Angela, Peter, that was fantastic. I'm sure that there's probably a lot more questions that may be coming your way, and perhaps we can talk you into a part 2 sometime. But I think Alex pretty much covered just about everything. I will be sending out a communication in the next few days that will have their contact details, a copy of the webinar recording. You are welcome to share that with anybody that might find it of interest, as well as a copy of this presentation. And thank you again for joining us. Have a great day. Thanks, Alex.
Thank you.
Thank you all.
Thanks.
Thank you.
Bye.